Hey everybody, welcome back to our weekly podcast. My name is Patrick Tan, the General Counsel for ChainArgos, and with me as usual every week, Jonathan Reiter, our CEO and Chief Data Scientist. Thank you for tuning in, thank you for watching, and thank you for listening to us if you're tuning in via the podcast. What do we have for you this week? We're going to talk a little bit about ShapeShift, that decision, if you will, and a little bit more about Hester Pierce. Am I saying that right? Heard some of her comments. We'll make a bit of commentary on that. We'll talk a little bit about the Kimchi premium. I guess you guys might be interested in that. For those of you who are not aware of the Kimchi premium, that's basically where the price of Bitcoin is slightly more expensive in South Korea as opposed to other parts of the world, and they call it the Kimchi premium because they eat a lot of kimchi in South Korea, presumably.
And it's returned recently. Not the kimchi, but the premium.
The kimchi never left. Anyway, finally, we're going to build a look for you guys live because you guys seem to enjoy the data sections. We're going to also have a look at a bit about one of the more complex areas when it comes to trying to figure out flows and stuff like that. It's always been UTXO type models because it's not like an account transaction model. So it's always been a bit more challenging. You guys have asked about that, so we're going to take a look at that. Build a couple of Bitcoin or modify some that we've already pre-built, like a cooking show. This one has been done for you, so we'll look at that as well. But John, tell me what your thoughts were about the ShapeShift stuff.
So ShapeShift was a no KYC trading platform,
Quality platform.
whatever, set up a long time ago by Eric Voorhees, who's a Bitcoin person for a long time, and it was a explicitly no KYC platform that was explicitly centralized for a long time, and they simply refused to do KYC and said they didn't want to, and stopped
you know what? The best KYC is no KYC.
Well, yeah, if you don't know who your customer is. So they eventually stopped doing that because they were presumably threatened with various things. I don't know. He's talked about that a little bit, and they've switched to a new model. We'll talk about that some other time. And they did a fair amount of volume, and certainly the service was involved in transferring, laundering, exchanging stuff associated with fairly high-profile hacks of various sorts over time. It doesn't matter what happened there, except that some kind of hack occurred and this thing had some of the funds go through it. So they've settled with the SEC as regards the securities nature of some of the stuff, none of the no KYC type things now. And then some SEC comments were made regarding the settlement. The fine was not huge. It's not clear that these guys, whether or not they were running a securities exchange, the licensed or unlicensed nature of that was incidental to the fact that they were running a no KYC, whatever, money changer kind of thing. The settlement document makes clear more often than is normally made clear in these documents, which are often not incredibly long, that this only covers the securities related stuff with the SEC, which strongly implies there are other settlements to come, particularly given that the founder and guy who ran it for a long time has talked at length about his discussions with the government about how they were required to KYC. This is not something that isn't on or wasn't on the radar screen. Whether there will be more news or not, obviously we have no real inside information on, but it would not be astonishing if there were, given that. The Hester Pierce comments were essentially, even now, why is the government not telling these people what are the things they traded they allege are securities? Come on, you got to give some people some clarity. I think we have similar but not identical opinions on this. I mean, I do have some sympathy for the idea that this service is like 10 or 11 years old, and you let somebody run without enforcement for long enough. Okay, the government didn't catch you for a while doesn't necessarily mean that you're getting off, but at some point they do kind of, not exactly owe people rules, but should at least make an attempt to do a better job than not answering at all forever. So that's not ideal. I can understand why they're being vague, because they don't want to, give up enforcement power going forward. Fair enough. Just because you failed to enforce stuff for many, many years doesn't mean that you kind of owe people making a little bit of an attempt. It's your mistake you didn't do this fast enough. This stuff should have been shut down. On that basis, these violations occurred in 2014. Coming after people 10 years later is not good for anybody.
Okay, so it's not a perfect analog, but it's the only one I could think of. So it's going to be a bit shitty.
So it's the one you're getting.
Yeah, it's the one you're getting. So the analog I can think of is with the tobacco industry, right? So the tobacco industry discovered like, oh yeah, maybe it's not a good idea to have people blowing smoke out of their bodies, putting smoke into their bodies is also probably not a good idea. So
And that's like in the 50s and 60s, supposedly. There's initial research.
exactly, because we're not dragons, so this is clearly not a good idea. But so you can then, there was a huge settlement, and there were lawsuits.
That's
and
in the
everything.
90s.
And that was in the 90s. That was a long time away. So you could argue to some extent that all this crypto blockchain stuff is somewhat complicated. Having a clear definition of control, decentralization, who controls what, who can be held liable or responsible for which bits of decentralization and stuff like that. It's not so immediately apparent, and it may take some time. There may be a learning curve, and so during that period of time, from the time when this stuff starts to the time when you figured it out as a regulator, it'll take time to go and do that. So, and the other thing that, and this is more of a legal commentary as opposed to a technical one, which is that this is a common law system. We're gonna let you do what you want, and then if we figure out that what you want is probably, take vaping for instance. People, vaping is a good example. It's new technology, a new way to consume nicotine, and nobody really knew whether or not it could give you problems. But obviously, as you go down the road and you realize, oh, there could be problems from vaping and stuff like that. So especially if it's abused, and then you go back and you try to regulate, you try to clean it up. But that's the benefit, and you got to take the bitter with the better. You have to accept that in a common law system where you have the freedom to kind of like do stuff, and we don't all have to agree on the rules before we allow stuff to happen, which is a civil law system. The rules are all very much laid down before we start doing it. So if you want to have that freedom to sort of like, if you want to look at it from this perspective, common law is more pro-innovation. A lot of times people often wonder, like, why is the continental United States somewhat more innovative than Europe, which is the old country? And that's because almost all of Europe, except for the United Kingdom, is civil law.
Well, to say that's why, but it's certainly part of it that in civil law systems you can't do new stuff. You have to wait till you get permission, and people complain about this in Europe forever.
Yeah. So and that's it's challenging for an entrepreneurial or innovative society like the United States, where the idea is that you should have the freedom to do everything you want, and then we'll retroactively kind of figure out, is that good or bad. Of course, and I make this comment all the time, if you want to have the certainty as to what you can and can't do, as a regulator, you can be expected to provide clear rules about stuff that doesn't exist yet.
Well, it's interesting. Actually, I'd push on the vaping analogy a little bit, because nicotine is generally legal and there's some kind of restrictions. So you could argue that some things around the delivery mechanism are different and the rules may not be clear. But if it was full of heroin...
Oh, yeah, that could be a problem.
Yeah, but that's already known to be banned in whatever most of the world.
Yeah.
So to the extent to which some of the decentralization and truly decentralized things raise novel policy questions, centralized services, ShapeShift was a completely centralized whatever service. There are a lot of things here that are not in question, right? And if somebody came out with a vape that was nicotine or just water with fruit, and somebody else came out with a vape that was heroin, it wouldn't be reasonable to say this industry needs entirely new rules. The heroin guy's still going to prison. And then the other people may have a discussion about how the one that's just fruit flavored is fine, and the nicotine guy has to follow some cigarette related rules or whatever. This industry has done an interesting job of saying nothing is clear, and some things are clear. I suspect, this is a guess, but that there will be more ShapeShift settlements coming out, and they will make clear that the government does not view some things as in question, and maybe gave people way too much leeway because they believed or were snowed over or whatever about how novel some of the stuff was.
I mean, for the record, I do like fruit in my water, so it's fancy. So
you get like these water hookah kinds of things, right? That's a thing. Right?
Yeah. So one of the jokes that I make, it's not funny, but I make it anyway, is that the only way you can have that kind of certainty to say these are the rules regarding these things is that, if you have Tom Cruise and a bunch of women scantily clad in a bath of water and, predicting the future a la Minority Report. Yeah. So
if you can predict the future, being a regulator is different. That's not relevant.
A thing. So and that's why I think that some of these arguments that are being made are pretty disingenuous. Like they're not you can't have your cake and eat it. You gotta pick a lane.
Yeah, I mean, there are cases where whether or not somebody's a security genuinely is unclear.
Yeah.
That exists in the world.
That's fine.
And there are some examples of that probably here. But it's not clear that there aren't plenty of examples where the answer is pretty clear one way or the other. So, I mean, and it was interesting that, Hester Pierce portrayed that people are not able to get licenses, register, whatever, because if you do anything that's unclear and some of the stuff is a commodity and some of the stuff is security, the government won't talk to you, when in fact the securities industry has resolved this problem repeatedly for many, many decades. You have a securities trading entity, you have a commodities trading entity, and if you make slight classification errors between them, you pay a small fine, you move on, and you keep doing business. And the fact that you can try, pay a fine for correcting it, change your behavior, and keep going forward is a feature of a common law system. Whereas in a civil law system, and people literally complain about exactly this when setting up businesses in Europe and other civil law, whatever jurisdictions, you'd spend forever negotiating exactly what you could and couldn't do, and then it's fixed.
Yep.
Those are different systems. The problem here is you're saying we don't want any of these rules at all, and even if only 30% of what you're doing violates them, you're making no attempt to follow the rules for the other 70 or whatever. Anyway, it's going to be interesting. I suspect we'll get to see some different treatment for different products.
So let's have a look at this Kimchi premium.
Yes.
So maybe you can explain to us what creates it. What were the historical reasons that it existed?
So this is a thing that's just come back recently. The value's gone up. So South Korea has a restricted currency, which is to say you can't freely convert the South Korean won to U.S. dollars or anything else. So generically, U.S. dollars inside South Korea are worth less money than U.S. dollars outside South Korea, because dollars outside South Korea are free to go anywhere in the world they want, and dollars inside South Korea can't cross the border. There are sort of travel thresholds for holidays and that kind of stuff, but commercial amounts of money, you have to fill out forms, and they ask where the money came from and whatever, that kind of stuff. It is, of course, also difficult to convert your dollars into South Korean won and come inside, but South Korean won are only usable in South Korea, in part because of the restrictions, so they're worth zero outside, and no one wants to do that direction, right? That's not a challenging thing. Also, dollars are, a bigger thing overall in the world. So that means the price of Bitcoin, or whatever, of dollars in South Korea is often different than the price outside South Korea, because you can't trade between the two, right? You can't buy in one place, send it, sell, and wire the dollars back, because that cross-border thing isn't legal. And banks won't process the transactions for you without filling forms out, whatever, doing stuff that's consistent with the law there. What you would see routinely for a long time is that Bitcoin would be extra expensive in South Korea, because you could send the Bitcoin offshore and sell them for dollars. You couldn't recycle that back into South Korea. Sorry, I should do that here. You can't recycle that back in. But a lot of people didn't want to do that. They just were happy to get money out and have dollars somewhere else. There are podcasts in which people talk about using it for gambling and whatever, all kinds of things. But there's a lot more flow in one direction than the other. This is true in almost all restricted currency regimes. So the prices are different. Famously, some of the early FTX stuff and lots of Alameda Research, whatever, lots of trading people looked at these differences, and they found creative ways around the banking system limitations, whatever. We're now seeing that price spread increase again, showing that there is demand to get money out of South Korea via this route. I would interpret that to mean that the banking system is clamping down on however this was being arbitraged before, right? So in regimes where the controls are extremely tight, you'd expect to see very large premiums. And in regimes where there are no controls, you see no premium. In regimes where the controls are very, very mild, Thailand's a good example of a place where the currency is not really restricted, but there's a little bit of stuff around the edges. Indonesia, the currency is very restricted. Argentina, the currency is very restricted. And you tend to see large premiums of some sort in places where there's an effective and strong restriction. So this tells us either that the South Korean restrictions are getting stronger, the laws have not changed, or the enforcement is becoming tighter, or it's more difficult to get around this. So I think there you'll either see the premium come back down and volumes remain high, which says somebody found a way around the rules, or the premium come down and volumes go down, which says nobody cares anymore, or they gave up because it doesn't work, right? So if the premium goes to zero and volumes are also tiny, it means this probably is being enforced. You can't put meaningful amounts of money through. Done, right? So that's an evolving space to watch. The first time around, the government clearly didn't understand what was going on, and so the stuff was, you could find ways around it. It just wasn't huge yet.
So on that note, let's do some data. Let's make some stuff. John's gonna take you through, and here we go.
So alrighty, let's do a we can. Okay, fine. So let's pick a token. What token you want to do?
I don't know.
Well, type a token. Do okay, 1 inch is a valid token. 1 inch. Okay, and then let's just do a simple volume chart over time. So we'll pick, and we'll do whatever. We'll do monthly to start. So this is time by month, and then we're just going to go over here, transaction, and let's look at total amount sent. So this will be monthly volume of 1 inch tokens. This will take a second to chug. We will remove this in post. Unlike Top Gear, we really will. Oh, or not. There you go. It's just like Top Gear where we say the wrong thing. So, okay, and this is whatever volumes, monthly volumes over time. Fine, I have no idea. We just picked this one. Okay, maybe you see that. You kind of care a little bit more specifically. So let's switch to doing it by date instead of by month. And let's limit our dates a little bit. Just make this the last 80 days is a reasonable number. Switch to a bar chart and then run that. And that'll give us. So these are somewhat more flexible measures of amount. Why is there a big jump? Oh, wow. Okay, well, there was a huge jump in volume on the 1st of January.
I don't know what's going on there.
No clue. So we can also add, because see what's going on with that. Let's add number of transfers. All right. It's going to need a second thing, so we can try to figure out what's going on here. This should add another line. And then we're going to have to change it to a second axis because I suspect the number of transfers is never 100 million a day. This should be reasonably quick. Last time was quick. Yeah, there you go. All right. And then I want to put number of transfers on the second axis. There we go. Oh, number of transfers also spikes. Although I will say the number of transfers overall are a little bit smoother than the volume spikes. We could add an average transfer size thing here. I don't know. I mean, there's lots of interesting stuff you can construct with multiple measures and try and correlate them. So we go on to do a different thing here. So this is a Bitcoin flows thing we were just looking at for something unrelated. So this is actually the ETH fundraising wallet. It doesn't really matter. So these are daily flow amounts for that. And then this is outflows, this inflows. So the way we look at inflows, right, is we're looking at the total amount of transfer involved where this address is associated with an output, right? So that would be an inflow because there's this is one of the output addresses, which is being fed into here. This is a difference between transaction UTXO and account model stuff. And here I think that's a very narrow range. It's also a very narrow range. So let's just. So here we're looking for outflows, which is when this address occurs as an input. So let's just similarly narrow up this range and see what we can find. This is in, did I do this monthly or daily? It's daily, okay. That's fine. And we'll just do that. Whatever, we'll just do it this way. 7 months, let that run. I suspect there's nothing going on out of the ETH one in the last 7 months. But,
yeah, they can't, I mean, I wouldn't expect anything.
So that should come back. Well, whatever. That's going to come back blank, but it is what it is. So that's the sort of stuff you can play around with. We can go back here and actually, so let's look at median transfer size. Let's look at this because we saw the amounts don't quite correlate. I don't know. Let's see what we got. We really haven't run any of these before. This is being run totally blind. So it's good that the token turned out to all be set up correctly. Wow, that's weird. Okay. Median transfer size blows up here. Well, then let's look at average transfer size. Huh. So for those who don't remember their definitions, the median is if you sort all of the amounts, the one in the middle, and the average is the average. So, well, that's fascinating, actually. The median and the average don't track each other at all. Huh. Okay. Well, we're not going to do this live on the podcast, but we may go create a percentile distribution of daily transfer sizes and try to figure out what's going on here.
That is
because the average transfer size is pretty flat, but the median's all over the place. So this tells us, for example, here that if the median is very low, it says a very large number of transactions are tiny, and then there's a handful of huge ones, which is,
okay. So
interesting.
If the bulk of transactions are tiny, as we've seen with other stuff on other chains, there is. I'm not saying that this is the case here. There is the potential that those are not real transfers.
Yeah. No, there could be an awful lot of random background noise, and occasionally somebody comes in and does real transactions. That's interesting. Well, we may have just found an interesting signal live on air. So there you go. We will come back to this next week. I promise, because I will run this. We will, in fact, save this and take a look. So.
All right. On that note, thank you for tuning in. We love to do the data bits at the end, but obviously if you're listening in on Spotify or wherever you get your podcasts from, none of this is going to really make much sense to you. And when we say wow, it's not going to make any sense to you at all because you can't see anything.
Yeah, sorry. We're not 1930s American football radio announcers. We need to work on our skills.
So there you go. So, I mean, I invite you to swing on by the YouTube channel. Just have a look at the last couple of minutes of every podcast. It's our goal these days just to make sure, because you guys have asked for it, so just make sure that the last couple of minutes on the podcast, we're going to show you some of the data stuff that we do on a day-to-day basis. But this is definitely interesting. And, I mean, this is a measure that people don't really look at when it comes to blockchain transactions, and it's that how big are the sums being transferred? How often are those are sums of that size being transferred? Because it makes a difference in terms of, are we looking at a real ecosystem, or are we looking at a tumblewheel at a bingo parlor? So those things are things that we should look at.
Which should be very useful trading signal for detecting if a project is, if the use of a token or project is real, and whether or not something is genuine buying, selling, wash trading. All of that stuff should be in some form detectable here. Yeah, we need fractional percentile. Anyway, I know what to come up with.
We'll build this up and flesh it out. It'll be all good fun. On that note, thank you for tuning in. Thank you for watching, if you're watching. And keep those comments, likes, and subscribes coming. And we appreciate it, and we appreciate you. Thank you. Have a great weekend, and we will see you again next Friday. Till then, bye-bye.